But all eyes on the MPC meet outcome. We've got Upasana Chachra, who is the Chief India Economist at Morgan Stanley, now joining in to give us a take as to what to expect. Thanks so much for taking time out. And it seems like it's unanimous in terms of the expectation with a 25 basis point rate hike this time around. Is that what you're expecting as well?
Yes, so we are also expecting a 25 basis points rate hike tomorrow. We think that should be the last rate hike in this cycle. So we're looking at a terminal repo rate at 6.75%. I think the upside in the inflation numbers that we got in Jan and Feb sort of cemented the case for another rate hike, but this should be, marking the end of the rate hike cycle in our view.
Right. Upasana, it seems like a 25 bips hike could well be in the price because this is an assumption that, the market has been talking about for a while now. But wanted to understand what from within the commentary would you be looking out for? And could that really be the cue in terms of the future trajectory of the rate hikes?
Yes, that's right. I think markets are expecting a 25 basis points rate hike. Consensus is expecting the same. So yes, to that extent, it's all positioned towards a final sort of a 25 basis points rate hike. The key to, I think, watch out for in tomorrow's meeting would be on the stance. So we are not expecting a change in stance. We think that the external factors, the uncertainty around them has increased especially in the last month. So we think that RBI or the MPC will likely not change the stance tomorrow. But I think that's one key thing to watch out for in terms of how, or if any, there's any change in the wordings of the stance from the RBI. And secondly, I think liquidity is also on top of everyone's mind. So anything on that front that RBI indicates, again, we are not expecting too much coming out on the liquidity front as well tomorrow, given that we think that RBI will do a rate hike and also not change stance. So in that context, it will be sort of inconsistent to come up with any other measures in view of the liquidity issues that are on top of people's mind. But I think those two would be important. Apart from that, any changes to growth and inflation numbers, I think there could be some mark to market adjustments to the inflation numbers given the, taking into account the updated data that we've got for Jan and Feb, but we're not expecting any meaningful revisions for fiscal 24 from the RBI's estimates. And similarly for growth as well. So RBI is expecting GDP growth at 6.4%, but that's for fiscal 24, and we've just started the year. So I don't think that we at least we are not expecting any major changes on that front as well from the RBI, at least in tomorrow's meeting.
Is going to really be on top of mind in terms of what the decision will largely be led by? Do you think inflation continues to remain the niggling worry? Is it also going to be the kind of rate hike moves that we've seen from central banks across the globe?
So see, RBI's mandate is to bring inflation below the 6% mark and to keep it in the 2 to 6% range. And to that extent, we've, sort of had inflation tracking above the 6% mark, apart from the November and December readings that were somewhat below that. So I think, yes, inflation remains center stage for RBI as well to ensure that, RBI's actions or the MPC's actions are in sync with their mandate to bring inflation down. So the key factor for RBI, as it has been until now, will be inflation. And we saw that upside surprise on inflation. Core inflation too remains sticky. So I think that is going to be the key driving factor for another rate hike tomorrow. But beyond that, I think RBI should get some comfort on the inflation trajectory. We think that inflation would be closer to 5.5% in fiscal 24. RBI's current estimates is also lower at about 5.3%. So I think beyond this upside that we saw in the last quarter, inflation numbers will steadily or gradually go down and remain below the 6% mark. That should give comfort to the RBI.
Okay, fair enough. And what do you believe is going to be the outlook going down the line? While this time around the expectation is that there is going to be that hike to about 6.75%, what are the future rate trajectory actions that you're penciling in from the RBI? Upasana, I think you need to unmute yourself. Yeah, go ahead.
Yeah. As I mentioned, this should be the last rate hike from the RBI in this cycle. Beyond this, we expect in our base case rates to be on hold until December of this year. We have a shallow rate cut cycle in the starting from first quarter of next year. So we build in 50 basis points of rate cuts. So 1Q 24 and then 2Q 24 calendar year is where we pencil in 25 basis points each of rate cuts, primarily driven by an improving inflation outlook. So going into say fiscal 25 or calendar year 24, we see inflation more closer to the 5% mark or a tad below 5% if we take into account fiscal 25. And we think that will allow the RBI to start a gradual and a shallow rate cut cycle. And in our framework, we are working with the real rates of around plus 100 basis points or thereabouts. And we think, as inflation moderates and that visibility becomes more entrenched for the RBI, the RBI can look at a rate cut cycle, but we have that starting from the first quarter of next year only.
Upasana, great to have you on the show. Thank you so much for taking the time out and speaking with us today. Let's see what the policy has to throw up tomorrow.